Fellas, you know Degree Cool Rush deodorant, right? Well, last year they changed the formula, and guys were mad about it. One dude even started a petition. So guess what? Degree heard us, admitted they messed up, and brought the original Cool Rush scent back exactly how it was. And it's in Walmart, Target, and other stores now for under $4. So grab some and remember why its cool, crisp, and fresh scent made it the #1 men's antiperspirant for the last decade. Degree Cool Rush is back, and it smells like victory for all of us.
Reality radio for a really great future. We're talking real money.
Well, somebody's working this weekend. Somebody somewhere is working this weekend, this Labor Day weekend. And you know who it is? It's all of us. I'm hearing that echo again.
I'm looking around. I'm only seeing two of us, but okay.
I'm hearing that echo again.
Well, because I'm more significant today, I should be heard 3 or 4 times, I guess.
My voice is bouncing off your forehead. Hello, everyone. Welcome. Willkommen. This is the Talking Real Money radio show and podcast. No, it's a little less...
Covering it with hair now, so it doesn't bounce around as much.
I'm not as blinded now as I was before.
By the white or by the
white? By the white.
Exactly.
Yeah, it used to be by the blonde, now it's just by the white.
Whatever, blinded by the white.
Yeah, okay. Yeah, 855-935-TALK is our phone number, 855-935-8255. And you can call us here on the show, which becomes a podcast next week, and ask questions about the management of money, about the investing of money, about the income that money is supposed to provide you in the future, about how you can have more of it, how you can keep others from getting their hands on it, and how you can stop doing dumb things. And dumb things are done a lot. They really are. And they happen primarily when we get lulled into a false sense of security. Right about now, you could ask pretty much any idiot anywhere if they can make money investing, and they'd say, yeah, it's easy. All you have to do is put money into something and it goes up. I know Bitcoin, I put money into that, went up. Put money into GameStop because me and the wife used to go down there all the time just to get the game, sit around and do nothing at home, and went straight up.
I don't know why you're leaving AMC out of this, or et cetera, but yeah, because when the S&P 500 has hit an all-time high 54 times so far this year.
Wow.
Yeah, everyone feels more secure, right? It's easy. We're making money. It's going up. First of all, it's not going anywhere. It's gone.
Yeah.
Number two, let me just explain something that I think people have a tendency to forget. When the market's gone way up, is your risk of loss higher or lower?
I think it'd be higher.
It's higher.
Yeah.
But people have this tendency to think it's safer now. No, it's far riskier now because when things have gone up, what's the way they could go?
No, it's safer. Get this. You don't know what you're talking about. I'm a smart, regular American. Let me tell you.
Regular.
I'm regular.
I'm an unleaded
regular American. And let me just tell you, sir, Mr. Smarty Pants, that the stock market is going up. Look at it. It is doing that. It is making money. What are you talking about? It is more dangerous. It has been better, and it is better.
Let's spin back to March of 2020 after the market went down 34%. Bang.
Oh, man, that was painful.
We're reflecting on an article written by our friend Jason Zweig, who talks about somebody options, but a margin. The guy was borrowing money to invest in stocks and sector funds and making all these bets and losing big money and then telling himself, I'll never do it again. And then he wakes up the next morning. Oh, look at Zoom. I got to get into Zoom. And it went down, and it's troublesome. But here's other than the fact that, yes, you should be worried about risk after the market has gone up always. But here's the two things I think people have a tendency to forget during these times that feel so good. Most people, sorry to say, they don't know how much risk they're taking because we talk to so many of you every day. You don't know. You need to know. And when I say risk, I'm talking about volatility. You don't know how much your portfolio could go down in the next whatever period of time.
You don't know what you know, and you don't know what you don't know.
Bingo. You know nothing about the future. And here's the other one.
Yeah.
Most people, especially, I see it 50 and plus, You don't know how much risk you need to take. You don't probably need to make 10, 20, 30% a year. You probably make 6 or 7 a year and you'd be fine. But you're reaching for these things that are going to make you more. And what's going to happen, Don, isn't there another side of the mountain?
Yeah, I got to tell you, a big part of why people are doing what they're doing is not even for the money. It's for their social standing. It's for to feel like a winner. And let me just tell you something that's an absolute fact that we both agree on. You are, at some point, going to lose money in your investments if you have them in anything except cash, in which you're losing money anyway. 855-935-TALK is our phone number. Give us a call. We'll talk about your money issues. I can do this.
Tom and Don are talking real money.
Is your portfolio a mess? You may have a case of hodgepodgeitis, but don't worry, we can help. Just set up a free, no-obligation meeting with a Vestory advisor at Vestory.com. No sales pitch, guaranteed. That's Vestory.com.
For your real life and real future, Tom and Don are talking real money.
855-935-TALK. That is our phone number. Give us a call. 855-935-8255. Because we want to talk with you. I mean, we could. We both could do this. We are good at talking. We could preach to you, tell you what to do all day long. We could just keep telling you what to do with your money all day long. Because we've been doing it so many times that I can't even believe how many podcasts we've done. I can't. It's
my brother's here, actually at the house today visiting, and we were talking about that, about how good members of our family are at telling others what to do. We're just really good at it.
Right. This is why
might not be the right thing, but we're just really good.
So we could tell you what to do, or you can ask us questions at 855-935-TALK, which Peter has graciously decided to do. Hello,
Hi, Peter.
Hi, Tom and Don.
Hey, Peter, what's up?
Okay, I got a question. I've heard you guys on different, when different people call that you refer to, let's say, a good ETF that is a low, like a 5 basis points. I know what that is. And the one that the call-in is using is, let's say, 50. So I know it's from 5 to 50, it's 10 times as much.
Right.
But the question I have is 10 times as much as what? Is the 5 basis points $2 and the other one is 20?
Yep.
Or is it $200?
No, it would be the 5. It depends on how much you have invested. So, yeah I
understand, but you know, but what I'm saying, I guess what I'm saying is, okay, let's go with just a simple 10,000. I assume most of the people on the radio have 10,000.
I think that's a reasonable assumption. Yeah.
Okay, good. So let's go with something very simple. Let's say it's a $100 stock or ETF, let's say, and it's 5 basis points.
Right, 5 cents.
Okay, so what is that? What is $100? 5 basis points. What does that interpret in terms of money?
Okay, okay, let's look at your $100. 1 basis point is 1% of that, or $1. I mean, 100 basis points. I'm sorry.
Yes.
100 basis points is 1% of that, or $1. So 5 basis points would be 5 cents. No, 50 basis points would be 50 cents. 5 basis points would be 5 cents. Make sense?
So let's go ahead.
No, I just said made sense because it fit.
He was laughing at his own joke.
I was laughing at my own bad joke. Yeah, go ahead.
Okay, so let's go with a little bit bigger, and let's just say 100,000. Let's say I have 100,000 in very low basis points, and I have a few, another 100 with something that's 50 basis points. So what does 5 basis points or 50 basis points, what does that turn out to be for $100,000?
$100,000 at 50 basis points. That's $500.
Okay, so...
And if it was at 0.5 basis points, that's $50. So we're talking on $100,000, a pretty substantial amount of money.
That's annually, too, by the
Yeah.
way. So they charge this every day, but that's the annual expense ratio.
Okay, so it's 50 versus 500.
500.
Mm-hmm.
Uh-huh.
500, that's
And-
for 100,000,
Mm-hmm.
and that's for 5 basis points versus 50.
Correct. You got it.
Okay, but how did you get to that? I mean, was there some...
No, it's
was it
just
some
just
figure?
big.
Because
I was probably one of the worst kids in high school in math, but it's just like real quick multiplication, head division. You just do it in your head because you're moving the decimal point down the line.
You get any more advanced than that, then you have to go to another program. It's not this one.
And I did it in my head. Tom did it in the calculator.
Just because I'm
He
always
wanted to make
scared that
sure.
we're going to get it
yeah,
wrong.
that we're going to get it wrong. Yeah, because sometimes you misplace your decimal point,
Yeah.
and you don't know
In this
where your
case,
decimal
easy.
point. You could lose a decimal point. You know, they're tiny.
You
know,
raise a great point,
we
though,
need a
because here's
decimal
the
point
thing.
tracker.
If you're paying 500 versus 50,
Right.
that means right off the bat, the people managing the fund that is charging you the 500 need to do that much better right off the bat to make up that difference in fee. Boom.
Right.
Easy
But
one to
here's
figure.
the thing: is that here's what I think. A lot of people, like Peter, get this. They look at the number, and it's not that big. Okay, it's like it's just 1% of my money, or it's just 2%. You know, little numbers feel little. It's when you apply the little number to a big number, when you start to build some wealth, that we're talking real money.
and time. Remember, if you do this year after year after year, those little differences become huge. We can show you that when you compare owning large cap stocks versus small, couple percent a year over a long period of time, a huge deal.
And this is what we're trying to get you, all of you, to understand, is all of these little tiny changes in both the way you invest and in your investment mindset. These little changes can make all the difference in the world because they start to build on each other. For example, you pay 0.5% less for your mutual fund fees. You could get an advisor who charges up to 3%. I can name names. Or you can get an advisor who charges 1%. So you're paying 2% less. You can use an asset class like value stocks or small company stocks that have in the past added a little tiny bit of return. And all of that adds up.
It does, and it's something to pay attention to. And again, most people don't know how much they're paying. Most people, because you walk into our office and say, no, I'm only paying this much, and then we look at the funds you're in, and they're far more expensive. So, yes, you need to know that. You need to know really what's important in all, because I do think sometimes also people get lost between the forest and the trees on this as well, because they just look at the cost. We, for many years, have recommended VT, for example, which is 7 basis points or something, Don? I always forget.
You
it's
are
very, very
making
inexpensive.
me look it up.
You got to look it up. VT, which is the Vanguard Total World Stock Index Exchange Traded Fund.
Victor Tango.
Tango. And,
Victor Tango.
Or as I prefer to say, Victor Tom.
Okay, what?
So-
Hold on. I'm looking for it.
I know, but here's the thing. With that
8 basis points. 8.
Yeah, 8 basis points. 8 basis point a year charge, and you own the whole world. I mean, it's pretty significant. So that's always been a favorite.
Well-
Somebody actually asked me yesterday about it, so I would love it.
Here's the deal. And let's talk about another number that comes up a lot when we're dealing with the financial industry. You go to your stockbroker, whomever that might be. They call themselves a financial advisor. You go to them and you put $100,000 in a mutual fund with them. We talked about the difference between 5 basis points and 50 basis points. How about the difference between 50 basis points and 5%, which is that's 500 basis points. The difference is you're going to pay $5,000 instead of $500 or $5. So, you see, you can save a lot of money if you do this right. 855-935-TALK.
Tom and Don are talking real money.
Set your course for a great future with a free copy of our 60-page Better Retirement Guidebook at vestory.com, vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Hey there, hi there, welcome back to the show. I'm Don McDonald at 855-935-TALK. That's the number to call to ask us questions, to make comments, to try to help us out, all of that stuff. 855-935-8255. And the call is totally free. We'd love to hear from you. We get questions both that way, and we also get them sent in at talkingrealmoney.com. And I thought I'd
got a good one?
Yeah, I thought I'd ease you into the online questions.
Instead of the 9 tax twists.
Here's one that is, that's easily 1,000 words. So I'm going to skip over here to one that's not.
Yeah, I'd really appreciate it.
This is maybe 50 words.
Okay.
Will that work for you?
That'll work.
All right. I think you can even handle this one. Hello. I know that I've heard you talk about short-term bonds before and what funds you suggest, but I haven't had any luck going back through the podcast to find them. Would you be able to touch on which funds you like for ultra short-term bonds and why you like them? I would really appreciate it. Thanks for all the information on the pod. That's from the land of the Huskers.
That would be Nebraska, I assume?
Yeah, very well done, sir.
Yeah, okay. And I don't know how their football team is doing this weekend, but good luck to them. I still like for very short-term bonds. Now, again, depends on the purpose here.
Mm-hmm.
If this is part of a longer-term portfolio, I would probably just go with a short-term government bond of some kind. But if you want a little bit of juice, you could use the VFSTX, V as in Victor, F as in Foxtrot, S as in Sierra, T as in Tango, X as in X-ray. VFSTX, the Vanguard Short-Term Investment Grade Bond Fund, still yielding, like 1.8%. And as Don has pointed out correctly,
that's
some
been its
volatility
past
there.
1 year yield. Yeah. It's not its SEC yield.
Yeah, there's some volatility there because, the things move around a little bit. It's not a for certain amount of interest nor return. So you're taking some risk.
Basically, for the year, that fund has had a net return of exactly zero.
Because of
it's gone down in value a little bit.
Yeah.
Now, I did, because he said in his note, ultra short-term bond. He said ultra.
I didn't hear the ultra.
He did. So, but let me this is where we need you to understand that the decisions you make have to be based on risk. You got to think about risk, but you also have to think about, am I going to make any money? Now, an ultra short-term bond fund is very conservative. The bonds come due in months. These are corporate and government.
Okay.
They're both.
Well, okay.
But the SEC yield, the 30-day yield on this fund is
Don't tell me. I was going to say 0.45.
Oh, you're very close.
Yeah.
0.38. So it's even lower.
It's just, come on.
It's even lower.
Yeah.
0.38. So what this tells you, and there's a great lesson buried here. The lesson is you cannot, and this is an absolute, I need you to believe this is fact. I don't care what any other idiot tells you, particularly insurance agents. This is fact.
It's 100% cheesecake what they said, so we can count on that.
This is a fact. If you want 100% safety for your money, no risk of any volatility, fluctuation in value, if that's what you're looking for, your expectation should be a net return after inflation of zero or less.
After inflation?
Mm-hmm.
Yeah, it's going to be less than
zero or less.
Zero. Yeah, absolutely.
Right.
I mean, by the way, what do you consider completely safe? Because even the U.S. government bonds have some risk to them, right?
You have to.
They might not pay you back.
You have to draw the line at major governments that can tax the heck out of people. I think anything issued by the United States government, the German.
That's not riskless, though. It's not riskless.
There's nothing that what's riskless is putting if you don't want your money to change in value to go from $1 to 99 cents, then you just keep it in a box.
Yeah, and then you let us know where that box is.
And make sure it's a waterproof box, because Pablo Escobar learned that burying billions of dollars in the jungle in canvas bags was bad for the money.
They're into Bitcoin now.
I think D.B. Cooper figured that out too or something, didn't he?
True.
855-935-TALK. Give us a call. Remember the D.B. Cooper jumped out the back of a plane? You're not that old. Okay. 855-935-8255. Give us a call. We want to help you manage money better.
Tom and Don are talking real money.
Set your course for a great future with a free copy of our 60-page Better Retirement Guidebook at vestory.com, vestory.com.
Reality radio for a really great future. We're talking real money.
It's the show that helps you deal with your dough better than you ever did before. Show tune.
I'm not going to
For some reason, it just felt like a show tune for a minute. 855-935-TALK. That is a very, very important number, because that brings you here to us. It brings you into our lair. No, we're just going to help you with your money. 855-935-TALK is our phone number, and I believe, although I can't swear to it, that Don is next. Don, welcome to Talking Real Money.
Don?
Hi, Don. Thank you for taking my call. It's a pleasure to talk to you again. I used to listen to you all the time here in Seattle back when you were on your national show back, over 20 years ago.
Yeah.
And,
More like 30.
Quiet over there.
Your print newsletter as well.
Thank you.
Wow.
I'm sorry, say again, please.
Oh, I was yelling at Tom for making smart aleck cracks.
I happen to know the actual time that was, because I was the guy who put him on the air in 1988.
Shh, quiet.
In Seattle on the then KEZX 1150 AM.
I was a precocious 12-year-old with a deep voice.
Yeah, all right. Anyway, Don, so thank you for your long listenership. So we appreciate it. Don appreciates it.
Yeah. What else can we do for you, Don?
Well, I just want to say that because Don's given me great advice over the years. And my other alternative was a guy on the weekends, a guy named Bob Brinker, and he didn't do so well. But
Bob was a market timer.
Oh, yeah, we know Bob.
Yeah. The question I have for you is, I've got a Roth. I've got $800,000 in my Roth IRA. I'm 71. I'm retired. I'm completely covered in terms of my own finances. My only family member left is my older sister, which makes her an eligible designated beneficiary of the Roth. And from what I've read, she's got two options should I precede her in passing away. She can either open or transfer my Roth into an inherited IRA, or basically take a lump sum distribution. And I told her the best thing is to go ahead and open up, basically transfer the assets, which are 60-40 in bond ETFs and stock dividend ETFs, into her own inherited IRA, and then take it from there. And what I've been doing is trying to go through the rules on the minimum required distribution for an inherited IRA, inherited Roth IRA.
Yeah, that's different.
I can't get a real good handle on what it is, because I read one thing and it says she's got the 10-year rule, where basically at the end of 10 years, the entire value of my Roth has got to be distributed by the end of 10 years after I pass. And then some others that say that basically she can have the extended life, or whatever they call that thing.
No.
If you inherited an IRA before they changed the rules a couple of years ago, you could just keep the whole thing going over your life expectancy. Can you give me a rundown on the required minimum distribution for an inherited Roth IRA?
Well, for an inherited Roth IRA, you see, the rules are different than inherited IRAs and inherited Roths. They're very different. Inherited IRAs, you can put into and take the life expectancy method with an inherited IRA. But with
you still have to have the money out in 10 years.
Not with an inherited IRA. You can take the life expectancy method. With a Roth, it has to come out in 10 years.
Okay, so that's the bottom line. Basically, she's got 10 years, and at the end of 10 years, it's got to be completely liquidated. She can't.
That is
there's no way to go ahead and
correct.
have it going.
That is correct. Yeah, I'm looking right here at the IRS.
I'm not understanding what you're saying, Don.
Well, what I'm saying is
Don.
a Roth IRA is is subject to the 10-year rule unless it's your spouse.
Right. That's spousal is a whole different thing. Correct.
An inherited IRA.
That would be if he got inherited from somebody else and then she took it over.
She inherited it from him. If she inherits it from him, she does have a life expectancy option on the assets transferred into her name. She's subject to required minimum distributions, and those must begin December 31st following the year of death. That's right from the IRS.
She's rolling it into her own IRA. I see what you're saying.
If it was a regular IRA, but with a Roth, it's 10 years.
Tom and Don are talking real money.
Tom and I created Vestory to help everyone become a better investor, even those who will never be clients. Let one of our advisors help you start your financial plan or solve a money problem free with no obligation or high-pressure sales pitch at Vestory.com, Vestory.com.
For your real life and real future, Tom and Don are talking real money.
Now, while we didn't have time to address it, oh, by the way, our number is 855-935-TALK, if you'd like to call. We didn't really have time in that segment to address it, but I think we should talk a little about the wisdom of leaving a Roth IRA to a similarly aged sibling.
Yeah, I'm not sure that, by the way, Don apparently did listen to Don McDonald, because if he is 71 and he has a Roth IRA that's almost $1 million, congratulations to both of you. I struggle with leaving it to somebody of a similar age because you're just handing the problem off to the next person. I personally would rather see Don, not that Don, the Don who just called. I got to straighten that Don too. I would rather see Don say the purpose of the money in the long term is X, maybe a charity or church, whatever it is. And maybe it's some of it to each party, because it just seems to me you're asking someone else to do the work to really make a decision about what's important in your life. And maybe you could leave a lump part of that Roth IRA to your sister if she needs the money. That's another thing. So I think there's some more thought that goes into all that.
855-935-TALK. We want to talk with you about your money issues. Give us a holler, 855-935-8255. And Joe, you're up next. Welcome to the show.
Thank you. Nice to talk to you guys today.
Good to talk with you. What's up?
I've got a question about fiduciary counselors, advisors.
Sure.
In 2008, when the junk bond thing hit, we lost half of our 401k and rolled it over when my husband retired.
Mm-hmm.
My son was in the military at the time and asked me to invest his combat pay.
Mm-hmm.
And I did a couple months of research, and because of that fiasco with the 401k, I didn't want to go into stocks and bonds or government bonds or anything else. So I looked into other things that we could invest in, and I came up with semi-precious gemstones. Not diamonds.
No, I know what you mean by semi-precious, jade and agate and that kind of stuff.
Well, I went into tanzanite when it was cheap.
Oh, tanzanite was the dumbest. Oh, my God.
Don wears a lot of it, so he knows exactly what it looks like.
Scam. Okay.
He's got a couple of rings and that thing you wear in your ear.
Stones that are worth a small fortune now. And not to mention...
good luck selling them.
Several others, like Sleeping Beauty turquoise and...
Okay.
Black spinel, things like that.
This is none of this is investing so far. What's your question?
My question is, some of the stones have appreciated 100 to 500%, not as much as the other ones, and I'd like to sell them and put them into something he can use down the line. But I'm not good at picking stocks and bonds.
No, you really shouldn't be doing that after the junk bond fiasco.
Don't need to be, by the way. You don't need to be smart about that in today's world.
Are you asking where you can sell your tanzanite?
No. I don't want to sell the tanzanite. It's just going to keep appreciating. But the other stones, some of the others I want too. But I want to. Do I find myself a fiduciary advisor?
Absolutely. Yes. And if you need help finding a fiduciary advisor, we have lots of resources at talkingrealmoney.com/help. That information should help you find somebody who's going to look out for your best interests, or at least going to try to, and suggest that you not do a lot of things you might have done in the past. A good one would not have put you in junk bonds, would never have you focus investments. So please be very careful and pick a good one. And thank you so much for the call, Joe. We appreciate it. 855-935-TALK is our phone number. I can't even count the number of times on a cruise. I've been on like 5 or 6.
It's always
and
there.
They're always selling tanzanite.
I know.
And it's going to keep going up because there's a limited supply of tanzanite. But I'm looking online. There's a website where you can buy tanzanite, and we're talking 2-carat tanzanites stones for $171. It doesn't sound like a
and that's one of those things that is a pure speculation, not an investment.
Absolutely speculating. It's beyond speculating. And the reality is, almost any stone now, almost any precious or semi-precious stone, probably any, can be manufactured, and it's almost identical. This is all a big game people are playing. 855-935-TALK. Give us a call, 855-935-8255. Speculative markets are all games. Mark, welcome to Talking Real Money.
Hey, can you hear me?
Yes, we can.
Yes.
Hey, thanks for taking my call, Tom and Don. You also have helped me in the past, and I don't plan to be buying any tanzanite in the near future.
Good for you.
That's too bad because we know a seller.
So I think it's a pretty simple question, but I don't know if it's an easy answer. And basically, I think I'm getting pretty close to retirement, but my question is, and maybe I'm looking for some references or websites or something that would help me with this. But how do you know when you have enough money to retire?
That's a great question.
That is a really terrific question.
It's one of our favorite questions.
It really.
And the answer is, what's the answer?
Well,
it depends.
Yeah. So which we sell on Sundays. It's another show. How old are you, Mark?
I am 59, almost 59 and a half.
Yeah, I mean, there's a couple of ways to do this because having just enough money is one aspect of this because you're going to have other sources of income, right? You're eligible probably for Social Security. I mean, I don't know about a pension, et cetera, et cetera. So there are many, and I think paulmerriman.com just added a new calculator where you can go enter your numbers and kind of say, will my money survive? That's one method. I prefer something at age 59 a little deeper than that, where you actually talk to a fiduciary advisor. Again, someone that's not trying to sell you something, somebody that's really trying to put together a plan and say, here's how much we're spending, here's what we want to spend in retirement, et cetera, add in trips, et cetera, et cetera, et cetera. This is the amount of money it's going to take. Here were my sources of income. Will it work? Rather than just going to a website, entering in, I've saved $1.5 million. Will it last? Because I think at 59, you're really in the red zone and you should consider getting professional help.
Yeah. And again, the answer in almost every case, it's this wonderful phrase. It depends because this is where money really gets personal. Everything you do with money is determined by you, or it should be, which is one of the reasons why we have such a beef with brokers, because it's a one-size-fits-all, what's hot today kind of approach. And that is wrong. It is the wrong approach to managing money. If you are working or have worked with anyone who didn't find out almost everything there was to know about you, your fears, and your needs, then you're not dealing with someone who is looking out for your best interests, and you're not going to get good advice, and you're not going to get good answers, and you're not going to do well long-term most of the time. 855-935-TALK. Give us a call. It's free, and we love helping you Manage your money better than you did before. We'll be right back.
Tom and Don are talking real money.
Want a free copy of my book, Financial Physics? Well, go download it right now at vestory.com, VESTORY.com.
Your guides to a really great financial future. Tom and Don are talking real money.
And again, give us a call anytime at 855-935-TALK, 855-935-8255. I'm Don McDonald, along with Tom Cock. And if you need more help than we can give you in our Q&A time, well, we want to make... He left his mic open. He always does it. I go, turn your mic off before you walk away. Tom, you need to remember I'll do it this way. Turn your mic off. 855-935-TALK. Anyway, where was I going? He distracted me. Just give us a call at our office, which is 800-386-3004, or go to vestory.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestory, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. Are we done now?